I have Michael Fredericks with Skeps today. Michael, thanks for coming on the show.
No, thanks for having me. I appreciate it.
I am interested in hearing your story because you kind of touched on it a second ago. What is Skeps and how did you get into the position you're in today?
Well, Skeps is interesting because it's certainly not my origin story where I've ended up. It's a technology solution, a software for contractors. There's plenty of softwares out there that contractors use to run their business, control their inventory, their routing of technicians. There's a lot of things out there today that didn't exist when I started over 30 years ago in the home improvement industry. What's important about this particular product and the name Skeps is probably important to touch on that as well, that Skeps is actually a descriptive word in the beekeeping world. It's kind of a reference to that beekeeping mentality of everybody working together for a common goal, which is a great description of this product because we literally went to the market for multi-years. The company's been in existence for 9 years, started out supporting the banks that support the financing for home improvement contractors to make sure the consumer is able to get their project completed. But it has evolved over the last three years by asking contractors about how the customers pay today, what they would like to see, and of all the other solutions out there, what are the fleas on each one of those dogs, and how can we solve them? We put 3 long years into developing something to solve all of the problems echoed to us by guys that have to live this experience every day. It's an exciting time for me. It's a new career path as well, which is exciting. And I currently lead all business development for Skeps. Been here about a year now, a little over a year. So I got to have a hand in developing this product with my personal experience as well. Yeah. So anybody on this podcast listening that was around 30 years ago, they'll know exactly what I'm talking about. There was a time before cell phones. There was a time before personal computers, before the internet. Now, mind you, we weren't in the Stone Age when I started in like 1990, but when as a sales rep for home improvement brands, and I'm talking the big national brands of that time, where your Sears Home Improvements, Service Master, Elegant International, Empire today, Protection One Security System, which is now ADT, part of ADT. These are all companies that I have led their national sales teams at one point or another. But I started out in 1990 as a guy in a car being dispatched to a home to find out what the customer's needs were. And back in these days, to get financing was impossible. If you got to the home and it was a needs-based purchase, and sometimes a roof is, and the customer doesn't save for a rainy day. The typical consumer doesn't have the money for a new heating and air conditioning system or a roof, which can run seven to $20,000 depending on the situation. So you have to have alternative payment methods available. In those days, if they didn't have the money and they wanted to do financing, you had arrangements with your local bank. You had to fill out paperwork, the white sheet, the yellow sheet, the pink sheet, and then you had to drive back to your office and fax that in to a manual human being underwriter who had a stack on their desk of people that they had to research and underwrite this loan to see if they were creditworthy. This process could take weeks, right? Now, if you got a big gaping hole in your roof that a raccoon chewed through, you might not have weeks to wait. And heating and air conditioning in Arizona, might be an issue if you got to wait 2 weeks and
Hmm.
100. It was not ideal. I will say that when I entered this world, we had pagers. So I was able to get a pager notification to call a customer. But I watched that situation specifically at Sears, which kind of turned into a credit company with the Sears credit card, right? Really pushing that to help customers complete their purchases. And that started to evolve into smaller finance companies backed by a tier one bank or just a large federally regulated bank to speed up the process. Like, how could we do that? And there was, I don't even remember some of the brand names like Conseco and like Green Tree, or there were some interesting names out there. But being with a large national company at that time, we were introducing things like a full-blown sales process that could be done with repeatable brilliance with every customer to build a brand, right? You had multi-steps, a proper greeting, building rapport, doing a proper needs analysis, those kind of steps of the process. And when you got to the payment section, we were selling the price of the job. What we learned at Sears very quickly is if you're selling the payment, which is a much smaller number than the over, it would be a much more successful experience with that customer in their home. They can determine when they pay it off, right? So
Mm.
it's just made it easier for the customer to get to that, yes, let's get the work done with this guy who can help me today. So, I mean, if you flash forward right around 2008, 2009, for those of you that remember, we had a huge economic crash here in the United States. The housing bubble burst and technology was starting to get fantastic. And coincidentally, that's the time when a company called Green Sky, which a lot of people on this podcast would be familiar with, came out with the first mobile app on a phone where you can do the whole application process with the customer and it would be sent somewhere for an automated algorithm to determine the credit worthiness based on debt to income ratio, FICO scores, all the good stuff that, loans are based upon. And that was industry changing. Now, unfortunately, the industry came to a screeching halt for about 2 years, 2008 to 2010, but they emerged with the only tech that could accomplish that. In a very rapid amount of time, they became the app that contractors use, a massive market share grab. And then you saw companies like a Fortiva Financial go, you know who's not being served? People that are they're credit challenged would be a nice way to put it. They're not particularly a tier one credit customer. So they entered the space in 2015. And that was around that 25 years that I had been in the field with all those big brands that I had mentioned. Just love this industry. And they came to me and said, we really need the field perspective. How do we introduce second look financing for credit charge customers? Can you come and help us build a software solution like a Green Sky, but behind Green Sky? If Green Sky turns it down, what happens next? We were able to create that space in home improvement. And in about a 3-year period, we were the dominant second look opportunity for customers that just didn't quite make the grade for a Green Sky approval, but they could also get a loan through, maybe higher interest rate, maybe shorter terms. It might be a cost affiliated to the contractor, but it was a 30% pickup in closing sales. So now you've got a first look and a second look that you're using. Well, how can you connect them? That it automatically goes from that first look turn down to that second look opportunity with that customer. So you started seeing integrations of first look and second look providers, but that gave some brilliant young people that are immersed in technology going, well, how do we automate that on a platform? Give them
Mm.
multiple first look lenders, multiple second looks to choose from. So you saw this evolution of platforms developing like that 2017, 18 until now, basically. There's still more newer platforms with cooler technology, but you're also relegated to the lenders they have agreements with. Those platforms charge lenders to be on the platform to get that business. You've got service software out there like a ProLine that they use on a daily basis. They don't want to have to leave that experience to go to
Mhm.
another app. Right. So how do you combine all of that and not charge the banks? Because interestingly enough, when you charge a bank to do something, they need to recoup that money by charging them, the contractor, a higher rate sheet to
Mhm.
accommodate, how many basis points that they're being charged to be a part of that. So those are just some of the problems that the larger enterprise level franchise groups, national footprint contractors were saying, it's costing us tens of millions of dollars a year for these financing issues. Can you fix this? So, Skeps spent, like I said, at least 3 years. Because we're a banking software first, facilitating consumer finance a lot in the home improvement space, we had to get federally and statewide regulatory compliant for our software to be used by a Citibank, a Bank of America, a Chase. So we had that, which none of these other platforms would have. So the customer's PII or personal information that we all now this is a high security issue for most companies.
Mhm.
We have that built-in protection. So it allowed us to do a lot more interesting things to solve those problems for these contractors and yet remain fully compliant from a regulatory perspective.